Hey, how's it going? I'll just want to do a lesson on the Federal Reserve and this interest rate hike, which apparently happened yesterday. So, just this is my intuition. I don't know this for a fact. I don't think really anybody knows um, the precise workings of this, except for the people who are involved. And at this level of the central bankers and above, and there are people well above them, I suspect. So, my understanding of the way this interest rate hike works is that the central bank basically puts out certain directives to all the other banks in its network, which, let's just say for the sake of this discussion, it's all of them. Like the Bank of America is the JP Morgan Chase, um, Wells Fargo, even your sort of smaller banks, your sort of local neighborhood banks, um, which have sort of benign names. I suspect they're all very much part of the network or heavily dependent on the activities of this network. So they have this notion of like an interbank lending rate. And so what I feel that is that basically at the end of the day, a bank has a certain requirement to have certain amount of resources, funds available, just in case, the people who deposited money there request for it back, or withdraw it that like the next morning. So these reserve requirements, limit the amount that a bank can loan, and it's like, obviously if we were just totally renegade, they would have no reserve requirements, and just if they had reserves, to service their clients, then good luck for the clients, or they might not. That would be a complete extreme example where they just whatever they get, they just lent it all out. And if you're familiar with the fractional reserve banking concept, for every like $1 that's deposited, they're able to extend credit debt to some multiplier of that, let's say $10. So their borrowing capability is more than just what you and I deposit into the bank. It's that times a certain number. So basically, this is kind of the system, because we have this multiplier effect, and there is a broad amount of credit that's available. They have to keep some amount of money in the bank, and it's not the total amount that we have deposited. And it's not even necessarily related, or not even necessarily dependent on the total amount of physical money that's out there. One would think that would be the limitation, but I don't know if that's actually the case. But let's just continue on with this, knowing that the banks have certain reserve requirements to meet the needs of potential major withdrawals, by few individuals or many at the same time. So then basically what happens is that at the end of the day, if they don't meet that requirement, they have to then borrow from other banks that have excess. And so that's the interbank lending that I feel is happening. And there's an interest rate charged for that type of lending. So basically, if one particular bank, let's say Bank of America, that day, tons of people have just happened to come in for loans, and they're qualified according to their lax criteria, they will push forward with those loans, and let's say that draws down their reserve requirement, or sorry, that drops down their credit reserves, their reserve requirement, they've probably exceeded that. They've gone too low. They've lended out too much money that day. They've lent out too much money that day. So at the end of the day, to meet their reserve requirements by the central bank, they have to borrow from JP Morgan Chase, let's say, for example, another bank at this overnight lending rate to make sure that they satisfy their reserve requirements. And so when that number is low, when that interbank lending rate is low, like let's say 0% or 0.1%, which it's been in the US for a long time, there is essentially no risk to just lend a lot, to just put as much out there as you can. Anybody that comes in, they have good, bad credit, whatever. Bank of America, JP Morgan Chase, whoever, they're just pushing it out there because if they're low on reserve requirements, they can just pull the money from any other bank for basically for free and still be able to meet their reserve requirements. So it basically, all the banks essentially are acting as one, and that's one thing. And then also the sort of amount that the amount of rigor, the amount of caution, that's put there before a loan is made is very little. It's like there's no real penalty for giving a bad loan and then, having a default or using that loan to drop below your reserve requirements, because you can just, it's very likely, and the Fed will constantly keep pushing money into the system. You'll never run out of money, or credit is a better way to say it. You would never run out of credit to offer, the next day, for example. So that's why this whole system is like a debt-based system. They're pushing credit out as much as possible. If you're in need of credit, there's highly likely some bank somewhere that is more than happy to push that out. And so when they push the more and more debt out, then there are certain benefits that the individual bank has that the central bank will reward them for this kind of behavior in some way, which I don't know the intricate details of that, but the more loans, the better. And so the way the housing crisis worked in this kind of environment is that they would not only push out these loans, but then you had people, sort of middlemen, who then would package all these loans, go to these different banks and package these loans and then put them on the stock market. They're known as collateralized debt obligations, just a fancy word for just bunching up a bunch of debt and converting it to like quote unquote equity or stocks, and then basically offloading that off of a bank's balance sheet and then putting it onto the stock market. And so now we're the people, those who are buying it knowingly or unknowingly, are now the holders of that risk, which anytime, a bank lends, they are the ones who fundamentally should be housing all the risk, because they're the ones who are deciding whether it's creditworthy or not. And so that's the way that they offload the risk, and again, from a spiritual perspective, this is the way Satan works. He's always looking for, someone else to blame. This has been the way it is from the beginning of time. And so, we can't be like that. We have to take our own, take responsibility for our own risks or sins or whatever, as much as we had control over. But so that's basically intuitively what's happening. It's like fundamentally loans are being made in high volume to people who are not, creditworthy. And that's one issue about the creditworthiness of an individual, let's say myself, wanting to buy a home or a car or whatever. But then there's also companies that are not creditworthy in the sense that they're not producing anything that's sustainable. It's like if you're just pumping money through these central banks or these banks, investment banks, into companies that don't have viable businesses and don't help people and don't do anything tangible, are just purely part of this consumer-based economy, they'll die eventually too. And so that's also the situation where we have a lot of companies who have a very exciting beginning. It's kind of like when you buy a home, you're all excited, you make the first few payments, you're settling in, but then you realize like, wow, maybe my cash flow is not as steady as I thought it was. And so companies are finding out the same thing. They have all this hoopla, and then if they fail, or if they're sort of failing, one way to kind of fix it is to do these private to public kind of things, or to go public, and put their to put some of their worth in the stock market. And so that's just really the same kind of thing as the mortgage thing. They're just taking risk or whatever and packaging it and putting it onto the stock market so other people can absorb risk, and very rarely is it a good deal to buy a stock at the price that it comes out at initially. Usually it's already very, very overvalued, or they're in a position where they need help, and they need basically like crowdsourcing. They need money from us, knowingly again or unknowingly. So that's kind of the scheme that we're living in, and it's very unlikely that it can last for much longer, in my opinion, just because that trickle down of money that's from the central banks through these more local banks to us, that it's not like an infinite flow of just money coming down. You have to go to them and do certain things. You have to like, abide by their policies, and their policies fundamentally are not for the low person, and they're certainly not for like the poor or the lower, quote unquote, lower class. I don't mean that by value in any way. They're anti those two groups without a doubt. The banking system in general would be anti those two groups probably no matter what. It would take very, very righteous leadership, in my opinion, to have light shine on those individuals. But now, like the middle class are being squeezed and stuff, and just these corporations that were funded, years ago, they're just realizing, and we're all sort of realizing they don't have legs to stand on, and even the major companies, they're also struggling. So it's not like it's just these like new startups and all that with all this venture capital money, that are struggling, opening up and closing, within a few months. It's like major companies, and so once, irresponsible investments have been made from the top down, there is an end game in that. That can't go on forever. There's no way to just sweep that under the rug. Fundamentally, the people, us, are the ones who have to bear the brunt of that poor decision making, because those who are at the top, who are kind of closest to like the water fountain, so to speak, if you think, and that's a good analogy for the way these interest rates work, is that once the interest rates are rising, like the interbank lending becomes more expensive, so the amount of loans relaxes a little bit. They're like, well, do I give out this loan, or do I experience this interest penalty at the end of the day when I need to refill my reserves? Then banks will slowly, not immediately, will start lending less, slightly more responsible. Whether it's even more responsible or not, we don't know. It's just they'll lend less. And so that basically, this expanse of the money supply coming out of this like faucet is just, whether you think of it as like narrower or it's just less volume, less water coming out of the tap. That's what's happening. The money supply is contracting. The money has been pushed out into the economy so much, and whoever's got it, and whoever doesn't. And like slowly as this money supply contracts, there's less money to push up the stock market with all these loan obligations or just general investing. And so, the stock market cannot go up forever unless more and more money is infused into the market, and rising interest rates is one of the major ways to like restrict the money supply and then cause things to then start to kind of be fair valued, because it's hard to know what a fair value is when you have a faucet that's just leaking out water constantly. Like, what is the value of things? Well, we don't know until that faucet's turned off. Then we know who has what money, and then whatever they're interested in becomes very valuable. And whatever they invest in, whatever those people who have a lot of money, whatever they're chasing, those kind of things will be expensive. And so the way I see it is that with the imbalance being so high, the people at the bottom will just have absolutely nothing, and then that's where the chaos starts. Because if people at the lowest level who have nothing to lose don't have anything and don't see anything in their future, they become desperate, and like that's, and this will be me or all of us. And so I'm not gonna like fight for anything, I'm giving up. I've given up a long time ago. But there are a lot of people, who maybe God has not given them insight, into like why this is happening, and they just react to their inner, desires for food, for sustenance, for whatever. And then so, they have nothing to lose. And so this is why it's very, very important in any economy to take care of the quote unquote lowest class, the poor, make sure that they're at least able to survive and live well and have an opportunity to advance. And that has been stifled and completely removed totally, like for lifetimes from them. And the lower class for sure. And now it looks like more and more it's the middle class as well. And the upper class, a lot of them, like if they spend a lot, they're also at a huge, they have a huge risk as well, because they have to have that job that they have to support that kind of a lifestyle, unless they have like generational money passed down to them. They're also susceptible to this scheme as well. So really, in my opinion, this is the only way that the mark of the beast could be ushered in a system like this, with complete dependency on this like sort of water faucet analogy. And you know, I don't think it would take more than a few years at the most to start to see, to start to really every day see the result, you know, of this irresponsible investing from our central banks.